central bank there. But then again, this is happening at a time when all the indicators are trending towards a positive direction for the economy. A number of watchers of this financial space and then also were asking questions of the managers of monetary policy as to why they kept the policy rate at 28% for quite a while. In fact, when this administration took over, the policy rate was increased from 27 to 28%, even though right from January, we had seen some considerable and remarkable improvement in various aspects of the economy. The governor of the central bank at the time had indicated that there were still some pressures and some risks that the economy was exposed to, so they had to use monetary policy to be able to mitigate and contain that risk that the economy was exposed to, even though we're still seeing the improvement in various aspects of the economy. That's why we saw policy rate increase in March from 27 to 28%. Now we've seen that reduction from 28% to 25%, 300 basis points reduction. The highest we've seen in a number of years. Now, if you see that and you juxtapose it with what is happening with the inflation trending downwards as well to 13.7%, there's a correlation because we've seen the central bank over the period pursue inflation targeting with monetary policy. How does this impact on the cost of credit? That's the cost of the loans that you take from the banks. Joining us on Zoom right now, Professor Godfrey Bokpin is a professor of finance at the University of Ghana Business School. Thank you for joining us, Prof. Now, 300 basis points reduction, the highest we've seen in many, many years by the central bank. How does this strike you?
I think it's an important step to reinforce the economic turnaround story. We want to be able to see that the numbers are all trending in the right direction. There has been consistent calls on various stakeholders for prices to come down. The policy rate is also a price, like, of course, any other price, and therefore we felt that there was a bit of a disconnect in terms of passing on the gains at the macro level to consumers, both consumers of credit, consumers of goods and services, because the drive now is to see that there's the trickle-down effect, there's a pass-through effect. And we have determined that one way of ensuring that macro-level development impact consumers directly, especially consumers of credit, is through the policy rate. And therefore, we felt that jacking up the policy rate at 28%, even when inflation had decelerated sharply to 13.7%, and the projection is that this will come down further, even to the extent that core inflation in this had come down to below 13% or so. So we felt that there was considerable room for the central bank to cut the rates. And therefore, we were expecting that close to 500 basis points, but they did 300 basis points. I think that is a good start, and I'm hoping that in the next pricing window, this will come down further. I mean, they could have come down to about 500 basis points, and that would not cause dislocation in the economy at all. If you look at the trajectory of inflation. And again, if you look at core inflation, which is quite of importance to the central bank and for monetary policy conduct. So I think that, yes, I commend them, but there's room for improvement. We need to do that. We need to align the rate and ensure that the Ghana reference rate also comes down, because 40% of the weight in the calculation of the Ghana reference rate, which is a benchmark rate for consumers, is attributable to the policy rate. And there's also a direct link between the policy rate and then the weighted interbank rate. So for now, what is holding the Ghana reference rate from coming down significantly is no more the Treasury bill, because the Treasury bill with a weight of 40% has done it per Treasury bill is below 15%, 91 day below 15%. But Ghana reference rate is in the 20s simply because 60% of the weight, which will come from the policy rate and then the interbank rate, these are rates that are stacked up there, not mirroring the economic turnaround.
But you see, the governor of the central bank was clear. A reason why he maintained the policy rate even at 28% over a period of the monetary policy review, because in his view and assessment of the economy, there were inherent inflationary risks that could still impact on the growth that we've experienced since January. Prof.
But look at the gap. Look at where the policy rate is. Even before this pricing window, policy rate was 28%. Inflation had come down to 13.7%. Look at the spread. Look at the real return. It's unacceptable. The point is that we need to create an efficient market where the policy transmission is clear, is predictable. So you cannot keep that gap. You cannot keep that gap and urge other market players to bring down their rates, because it's not only Bank of Ghana that is mindful of inflationary pressures. Everybody else is mindful of inflationary pressures. So if we are urging other stakeholders to bring down price and the rest of them, I think we need to lead by example. And this wouldn't be out of emotion. This would not be emotionally driven. This will be driven by the data, because the data is telling us that inflation is firmly on a downward trend. The pressures are there, but they can be contained. They can be contained within the window that we have. And that is essentially the point that I'm making. Of course, central banks all over the world are very conservative and all of that. But I think one ought to be mindful that we do not create distortions in terms of trying to take advantage of the system by not passing on the gains to consumers of credit. We expect that there will be a pass on of the gains from economic turnaround, exchange rates, aggressive strengthening of the currency. We've seen how imported prices are driving down inflation. We've seen imported inflation much lower than or slightly lower than locally produced inflation. We've seen all those numbers coming down. I think consumers of credit must equally get their fair share of the gains that we are talking about. And these gains could have been passed on to consumers of credit without necessarily dislocating the monetary policy stand. I'm just looking at the gap. It's just unacceptable.
I do appreciate your thoughts on this. Professor Godfrey Bokpin is a professor of finance at the University of Ghana Business School. Thank you for joining us here on Ghana Tonight.